Welcome back to the Neuro Finance Masterclass. This is day 66 of our 365 Days to Financial Freedom series. Look, over the last few days of this explainer, we've covered a lot of ground. We've looked deeply into market fear, bonds, and gold. But today we are shifting our focus to a completely different level of the game.
Absolutely. Today, we meet the absolute king of the financial chessboard, the US dollar index. Or, as you'll quickly come to know it, the DXY. We're going to unpack exactly why this is literally the single most important chart you will ever look at.
Okay, let's dive into this, because I know this hits home for everyone who has ever put capital on the line. Have you ever woken up, checked your phone, and boom, your Bitcoin or your Tesla stock is suddenly just flash crashing? Your portfolio is bleeding out and you're scouring the timeline, but there isn't a single piece of bad news. No scandals, no missed earnings, nothing, just red.
Yeah, it's incredibly frustrating as a retail investor. You sit there feeling like the whole market is just rigged, or like you're missing some massive secret that Wall Street knows but you don't. Well, you kind of are.
The answer to that entire mystery, the invisible hand behind those phantom crashes, is almost always found right here. It's the ultimate ruler of the market, the absolute king of the financial chessboard, the DXY.
And once you actually understand the king, all that seemingly random chaos in the stock and crypto markets, suddenly it starts making perfect sense. You stop guessing, and you start seeing the underlying matrix of global finance.
So let's break down exactly what the DXY actually is. It's not a stock you can buy. It's not some shiny new coin or a trendy tech company. It's an index. Basically, it measures the sheer strength of the US dollar against a basket of other major global currencies. We are talking about the heavyweights here: the euro, the Japanese yen, the British pound.
Right, exactly. Think of it like this massive glowing scoreboard for the global reserve currency. It tells you, literally second by second, exactly how strong the foundational money of the world truly is.
And reading that scoreboard is pretty straightforward. When the DXY is going up, the dollar is flexing. It's becoming more powerful and a lot more expensive relative to the rest of the world.
Right. It means capital is just flowing straight into the dollar. The king is hoarding power. And as we're about to show you, when a king demands tribute, the rest of the kingdom really has to pay the price.
Which brings us to the great divide of the financial landscape. This dynamic right here, this is the secret that separates a true architect from a total amateur. On one side of the battlefield, you have the US dollar, the DXY. And on the exact opposite side, you have your risk assets.
And when we say risk assets, we mean almost everything you probably hold in your portfolio right now. Stocks, crypto, gold, emerging markets. These are the two massive opposing forces that completely dictate the flow of global wealth.
So the crucial point is, you have to view this entire dynamic as a massive global seesaw. Or, to use a great term, a totter-a-volley. These two sides, the dollar and your risk assets, they literally cannot be up in the air at the exact same time. They are locked in this heavy, fundamental, inverse correlation.
Exactly. It's basically gravity. If one side of the seesaw is rocketing up, the other side absolutely must come crashing down. You just can't have both ends of a seesaw up in the sky.
Let's look at the brutal mechanics of this. When the DXY shoots up, global liquidity is basically getting vacuumed right out of the financial system and sucked straight into the dollar. Investors are aggressively dumping their risky assets just so they can hold the king. That is exactly why your stock prices suddenly tank without any bad news. But let's flip it. When the DXY goes down, the dollar is getting weak. Institutional money looks at that losing currency and says, get me out of cash. They throw their money right back into the stock market and crypto to find some yield. Liquidity absolutely floods the system, and guys, this is when the massive bull runs happen. This is when the party starts. And this brilliantly illustrates why tracking the king is non-negotiable. The DXY is your ultimate early warning system. Remember back on day 61 of this masterclass when we discussed long-term resistance levels? If you see the DXY breaking out of a major resistance line, man, it is a glaring red signal that a massive storm is coming for your portfolio.
Oh, for sure. That breakout means the vacuum cleaner just got turned on high. And this is exactly when your Neuro Fitness has to trigger. Amateurs see their stocks drop and they completely panic sell. Architects, they see the DXY breaking out and they prepare.
Actually, I want to slow down our intense pace for just a second here to really focus on that Neuro Fitness. I want you to consider this exact mindset. The king is strengthening. This is expected. I will wait for the dollar to peak before I deploy my dry powder.
That right there is the exact internal monologue of an architect. There is zero fear. There's no confusion about why Bitcoin dropped 5% today. There is only calm observation of the king and calculated patience. They wait for the seesaw to hit the dirt before they even think about jumping back on.
Let's see how this builds into your daily actionable routine. We call this the architect's gaze. And here is your specific cognitive task for today. Step 1. Open up your charting software and type in the ticker symbol DXY. Step 2. Overlay or compare its 12-month movement to Bitcoin or the S&P 500. Step 3. Just observe. Watch how they move in completely opposite directions. Seriously, do this exercise today. Seeing it with your own eyes on your own charts is going to completely rewire how you view market momentum. It is a total game changer. Which brings us to the ultimate empowering rule of today's explainer. I want you to write this down. Never check your portfolio without checking the king first. An architect never buys crypto or stocks without verifying the dollar's strength. You have to respect the dollar, or it will respect your capital by taking it away. It's the ultimate measure of financial humility. You could be holding the absolute best tech stock in the world, but if the global liquidity tide is pulling out because the king is rising, your boat is going down with all the others. So, as we wrap up today's deep dive into the hidden forces of the market, we want to leave you with this final provocative thought. Will you learn to watch the king's shadow and anticipate the moves? Or will you stay in the dark and let the dollar just steal your capital in the very next market storm? The choice is entirely up to you. Get to your charts, apply the architect's gaze, and we will see you right back here for the next session of the Neuro Finance Masterclass. Stay focused out there.